Hello and welcome to Pro Trader Strategies market commentary for Wednesday, May the 29th. My name's Eric Wilkinson with Pro Trader Strategies. And I just want to say, let's start over. Hey everybody, my name's Eric Wilkinson with Pro Trader Strategies. I'm here to teach you some different option strategies Hey everybody, welcome to Pro Trader Strategies. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman. I'm here to teach you guys some different option strategies or how I trade. In order to increase your probabilities of success, you can follow me at Wolfman's blog on Twitter, and you can check me out at wolfmansoptions.com, all right? Anyway, let's get on with it. Some economic data across the pond. Really not a whole lot to see here. They're preliminary stuff like preliminary French CPI and stuff like that. Those numbers came in pretty close to inline, so I'm not really going to dig into those too much. And then back here in the United States, we got Richmond Fed Manufacturing Index came in at 5, was expected to be 6. So slightly lower than expected there. We've been seeing this trail off a little bit, but nice to see a bit of a bounce back in that Richmond Manufacturing Index. And that's about it. Everything else is about the reports and the China trade war and everything else. That's really what's driving the markets right now. We've got crude oil coming off a little bit, about $1.74. Yesterday, they went up and tried to test that $60 a barrel mark, as we can see here. The market traded up to there, and let me pull up my pin. You can see right here, traded at 59.70 something. Let's just call it 74 is like the number that's coming to my head. That was a high and was rejected almost immediately. The market fell off again. Today, you know, that $59 a barrel even mark couldn't hold as well. We opened up today and the market just slammed down. Now, I was expecting this Fibonacci to hold a little bit stronger as it has in the past. Last, 2 days previous, actually 3 days previous to that, it's kind of found some support there. Today it peeled right through there. But again, that is at the end of the day that we look for those support and resistances to really come in as the bulls and bears try to defend those areas. I think that because it's been defended 3 times in the past couple of days, today it is going to be a wash for those guys. It's not going to help much. So I might get my move down into the mid to lower 50s, which is right around this area here that I'm thinking if the market could come down here and trade at least around in that area, that would be good for the overall economy, because I'm already starting to see, I just filled up yesterday and it was $10 less a tank for me to fill up. So that's what I'm talking about. I can now spend that $10 somewhere else, and people will do that. And because you and I spend that money completely differently, you may go to Starbucks. I don't like Starbucks. So that money going to Starbucks, helping and tipping the barista, I may go over to, let's say, Caribou Coffee. Now I'm creating that velocity of money there. That money gets spent somewhere else. Or I go to, your friend goes to the mom and pop store around the corner, and that helps create the velocity of money. All right, so that's what we're looking for. Get that money out into the economy, spending in different ways, and then those people spend their money completely different. That's how we create that spider effect and get this economy back on track again. All right, or at least one of the ways. I mean, it's not going to be the saving grace, don't get me wrong, but you can understand where I'm coming from there. All right, gold moving a little bit higher today by about $4. Not really thinking to test that 1300, which I kind of expected with the morning sell-off. Retail is getting punished across the board. I thought there might be a little bit more push into gold, but that is pretty telling that it's defending, or it's not even testing that 1300. I think a lot of people could be looking at some of the cryptocurrencies as a flight to safety as well, because we're seeing those things really jack up. Bonds. Now, I should be eating crow or eating my hat or something with this. I just don't see this market being able to sustain these kind of interest rates. This market is trying to reflect lower interest rates. I don't think that the FOMC is that keen on doing it. They continue. We see these Fed governors talking. They're not interested in lowering interest rates right now. I've seen a couple of them seem to like almost hint at the fact that they have screwed up a little bit here, but nobody's really coming out and throwing in the towel at this point. Now, another thing is bonds moving higher are making the bonds moving higher, interest rates moving lower is making the overall markets feel like this economy is really struggling. And I don't think it's struggling as bad as everybody is saying. Now, of course, we ought to look into the future and see how these tariffs and everything else in the trade war with China is going to hash all out. But at this point, if we were to take a snapshot right now and the bonds are up another full point on the day, I don't think we're going to see interest rates get lowered soon enough for this to work out. But, the market can stay irrational longer than we can stay solvent. So I'm not playing that game right now. All right, VIX spiking higher. It's nice to see the VIX spike higher. That indicates that we have premium selling strategies out there. It also helps if you bought some premium strategies. If you're buying debit spreads or something along those lines, then this increased volatility is helping you even if you're directionally wrong. All right, Dow Jones Industrial Average off 300 points right now. It didn't even consider the POC right here. It just jumped right through it, right? It's acted as support or as a magnet right there. So it's not really a support and resistance. It's really a magnet. But today, that big gap down is really telling that there was some bearishness in the market. And people are really worried about this trade war causing the global economies to really slow down. All right, Nasdaq. Let me move this down just a little bit. The Nasdaq peeling through my 50 Fibonacci here, the 22, the 7230-ish area, which is what I was talking about. 7228, I think, is where it's lining up. 7228 right here is a major support, but we blew through that and went straight down to the 200 simple moving average right here, SMA, and that is acting as like the support this morning. Now, the bulls and the bears, as we approach that, it's starting to slow down. This area right here did not really see that. It kind of just peeled right through it this morning, right off the open. So it's down about $87 or 87 points on the day, testing the 72 handle. If we break this 72 handle, you guys, it's looking like 7,000 is surely to get tested right here. So that's going to be a key point to look at. Part of it is that we've got this high volume node here, and this is a pretty good support level at the 38. So the market peeling through this, if we get below that 200 simple moving average, it's almost a sure thing that we're going to be looking at targeting that 7,000 over the course of the next month or so. Then let's look at the chart of the E-mini S&Ps. I talked about this quote aged pretty well. I said that it's a magnet. We got to go there. Remember, I talked about this. We've got to at least hit the point of control, find that magnet there before we really start resuming anything else. So we're looking for this magnet to be drawing it down. We talked about this before, that it was going to be pulling it down. It's done just that over those course of those days. And, the point of control didn't cause any momentum slowing down, which it doesn't normally do. It will just go to that point, and it can overextend as it goes through, which is done. Right now, we're resting right on that 200 SMA right there. That will act as support for sure. Anything worse than that, we're looking at this 2735 area for the market to find the next support. A lot of bearishness in this market, so I don't know that that is out of the realm of possibility. I just knew that we had to come down and test this point of control. We've done that. We've peeled through it. Now the next thing to look at, if we settle below the 200 simple moving average here, if we settle below that, it's going to want to target this 27 735 area, all right? That's going to be the next support that we can find. It lines up with a volume node, so we could easily see us peel right through that area and come to that as a safety area. As you can see, we've done that here with the volumes. If we draw a line, you can see we've kind of settled down in and around these areas quite often. So we could see this settle down in and around this area for a little bit before we start making any other move, because we can see right here, this is where there was a lot of back and forth. That's where people bought into it or got short. So bulls and the bears battling it out around that area back, in October, November of last year. We could easily see that happen again as we move forward here. It's just a comfort zone where we start slowing down, but maybe even build in this little bit of a volume area right here to create a nice little curve on the market profile. All right, E-mini S&Ps, overnight inventory got really short. It's always telling, I mentioned this, overnight inventory was relatively short. That is not an attempt to flush out the overnight inventory. It was really acceptance of this, which feels very bearish when you see that happen. There's no flush out. They are just like, I agree with you. I'm out. I'm just pulling the ripcord. Let's ride this. And that's what it's felt like this morning. Now, late day rally could change all of that, because there's a lot of markets. Google's not one of them. The only reason why I pulled this one up is I'm trying to get out of my 1,300 short calls in Google right now, and there's just no participation back there really. So I'm just going to let it ride out and have it in as a GTC. So we'll see if I get hit. But one thing I do want to note, retail, like I said, is getting decimated here. We can just kind of flip through the charts. You can see Lulu getting crushed, Costco getting crushed. Who else is in here? Booking is probably not so much, but a lot of these retailers are getting beat up right now. Even some of the staples like Kellogg, surprising. Usually we see a lot of staples find a little bit of support as that market starts to slam down. So we're seeing a lot of these though start to come back and find a little bit of a bottom. It looks like they're bottoming. They're creating. We're getting a lot of dojis at the bottom here where we've kind of gapped lower like this, but they've rallied back to make the doji look more like that, or even a star, maybe a little bit lower than that. So at extremes, those are setups that we're looking for, kind of like I did with the MRK, where I saw that at the top of a pattern, at the bottom of the pattern. These are the kind of things we're looking for as well. It could have been a doji like this as well. So if we get something like that, that's good. Any of those types at this type of move are what we're looking for from these kind of markets. So Starbucks being one of them. I think Apple might have been one of them. So you're seeing a lot of these have those kind of setups. IBM can rally back just a few more points. We're going to see that there. So this might be the early sign indications that we're seeing some support at these levels for these markets. So that is going to be key. We start seeing confirmation, even with Coca-Cola, we're seeing a little bit of that pattern where it kind of just free fell. It feels like it's not capitulation because we're not at the major lows, but it's starting to feel kind of like that, where you're seeing just some panic going on, people wanting to get out a little bit early, and I think that they are getting out too late. And we're talking about this, the market rolling over and then go back to test those highs that we've seen that we know are not printed in the day session. So for instance, these highs in Nasdaq, if we pull out the overnight, if I can remember how to pull out the overnight easily, show extended hours, don't show extended hours. You can see we just lost that high of 78, 78.79. Add in the extended hours. So 78.67 is our high there. That must be an overnight. Oh, no, show the overnight. So yeah, 78.79. I knew that was right. 78.79 is the high on the extended hours. and 78.67. So it needs to go up and print 78.69 during the day session. I think that the markets are looking a little bit stronger down here. Like I said, a rally towards the end of the day in the Nasdaq. We've got this gap fill. That could be, if you're bullish, the thing that is the catalyst to cause this market to start rolling over and look to come back up and print the highs there. So a lot of things going on. Nothing confirmed yet, but we're starting to see a signal here where the market might be finding a bottom from this correction here, all right? And that's all I got for you guys, other than if you can't take that, take it easy.